Welcome back to another episode of Pulse on the Market, the show designed to help you as an investor make better, more educated financial decisions. I'm your host, Jaden Vrains, founder of Vrains Capital, and let's get right into it. So for today, it's actually been quite a hectic day. I got a lot of stories, a lot of news reports on jobless claims, on Mexico imports, terrible news from 23andMe, and many other stories. So to get right into it, for the indexes, the Dow is down 0.33%. The NASDAQ is up 0.67%. And once again, we see a inefficiency in the correlation between the S&P and the Dow. The S&P is up 0.25%. And it hit an all-time high over 5,000. We finally broke the 5,000 mark, which is huge news for the S&P 500. And we saw a lot of the futures just shot up for the S&P once it hit that 5,000 mark. And this is big news. And it's always cool to see in an index like that hit a huge price mark, a huge, what's the word I'm looking for? Huge threshold for the price. Small caps are up 0.78%, and the 10-year Treasury bonds are up 0.84% at 4.189. So to get right into the stories, so specific stocks that are up quite a bit today. So NVIDIA, once again, the semiconductors are dominating the market. NVIDIA is up 2.78%. It's up to 715. They just came out with plans to create their own custom chips. And this is pretty big news because it's a $30 billion market. And by them entering into this market of custom chips, because before they just mass manufactured the chips that they're already doing, but now they're going to make custom chips for specific companies. And that is going to be huge because they're going to undercut a lot of the rising competition, people that are trying to take market share from NVIDIA. But no, they're going to undercut all these smaller companies and dominate the custom chip because they're already so big, so well developed that they're going to be able to take a vast majority of this market share pretty quickly. The super microcomputer is up 5.33% once again. It's at 735. We have seen the biggest increase from SMCI as the stock ticker. The beginning of the year, like I said earlier, was at 270. Oh my goodness. And now it's at 734. They've seen, let's take a look at the charts. Last year, 750%. Year to date, 163%. Oh my goodness, that is quite the stock to have been invested in at the beginning of the year. And they look like they're continuing to rise. The technicals are indicating strong buys. The analyst ratings are all buys. So this could be a potential stock to look at. It is very expensive right now. So the P ratio is definitely it's at 55 right now. And I can only see that getting bigger as the stock price continues to increase. But the estimates for the earnings per share have been increasing as well. We've seen a constant increase in their earnings, and this company is growing very quickly. Huge news on cryptocurrencies right now. Bitcoin hits an all-time high since the spot ETF came out. It is currently at over 47,000. And when Bitcoin goes up, everything else in the crypto industry goes up. So there's companies like Marathon and Riot, which are two Bitcoin mining companies, and they're both up as well. Riot is up 9%, Marathon up 7.5%, and Bitcoin itself is up, I believe it's around 5% to 47,000 today. And this is huge. All the smaller altcoins also rose. So my little personal portfolio in crypto, it grew quite dramatically because of the small altcoins that I'm in. Also grew even larger than Bitcoin did because the beta on them is usually a lot higher. When Bitcoin goes up, the rest go up far more quickly, they go up a lot more than crypto, percentage wise at least, not dollar amount. All right, let's take a look. So for the stock of the day, I've been researching quite a bit on this stock for quite some time. I'm currently in this position as well, and it's Mercado Libre. It's out of South America. And the ticker is MELI. And I appreciate the recommendation from Braden for this stock. And I've actually already done quite a bit of research on it prior to this recommendation. The current price of Mercado Libre, it just changed. It's at $1,765 per share. And they have an earnings report coming out in 13 days on the 22nd. So their trailing trailing 12-month EPS, the earnings per share of the last 12 months, is 19.53. And the projected for the next 12 is 30.47. That's a 56% increase in earnings per share. Like I said in the last episode, that's what I look for in a company that's growing, that I'm looking at investing in, is the growth, the projected growth, how they've been doing in the past, but also what are they projected to do in the future? Because that's far more important. If a stock drops and you don't see that the company is going to be increasing their earnings per share or their revenue for the next 12 months, it would be hard for that stock to recover and come back to where it was at, because the earnings just aren't backing that up. They're not driving the stock price up. So a lot of people, when they see that stock drop, they're like, it'll come back up eventually, when they don't have any evidence that it will. And usually the forecasted EPS, earnings per share, and revenue can forecast whether or not the stock will increase. And so it's really just a pray and hold, just praying that it goes back up, or praying that they just have a random crazy quarter that surpasses expectations by 300% for their stocks to come back up. Which is why sometimes we need to cut our losses. We let the winners ride, and we have to cut the losses when there's no evidence indicating an increase later on. All right, let's get on to the revenue from Mercado Libre. So their trailing 12 months is, over the last year, $13.22 billion. And over the next 12 months, they're estimating $16.97 billion. That's a 27% increase in the revenue, which is super solid. And over the last 4 quarters, the surprise average for the revenue is 4%, up 4%. So you can basically take that number and times it by 1.04 to get the real estimate of what it's going to be at, just based off the average surprise. And get this, for the EPS, I forgot to say, over the last 4 quarters, the surprise average is almost 30%, which is, that is preposterous. I don't know who's giving these forecasts, but these analysts need to adjust their forecast, because being wrong by almost 30% over the last year of earnings reports on a company like Mercado Libre, that's pretty bad. But it's good for investors, because if we're long on the stock and it surpasses expectations by 30% every quarter, man, we're going to see some intense growth within the stock. My only concern with Meli would be whether or not the price is already, like the growth is already indexed into the price. So it's already added into the price. Because just in beginning of this year, the stock was at a little over 1,400, and now it's over 1,700. So that would be the only concern, is how much of these expectations is already included into the stock price. But I still think it has plenty of room to grow, personally. So this has been one of the stocks that I've been looking at recently, that I continue. I might end up growing the position, especially with the earnings report coming up. I think that it's going to perform well. This is all opinion based, by the way. But I'm bullish on Meli. The stock yesterday, in case you missed it, was Shopify. And after I came out with that episode of the podcast, I kept seeing recommendations pop up from specific companies and specific institutions saying, oh, Shopify, they increased their price target to 100 from 90. There's other people that are bullish on Shopify as well. And if you want the report on that stock, just go to yesterday's episode, where I went into detail with similar stuff like I did today with Mercado Libre. Perfect. So not too long ago, Boeing, I don't know if you guys saw this on the news, but they had a panel that just got ripped off mid-flight on one of their Boeing planes, and it fell in the backyard of just a random teacher, and he had to bring it in and turned in the panel that was missing. But imagine that, just having a panel fall 4 feet from you. I mean, that could easily kill someone. That's a security liability. And that's dangerous. We can't have any mistakes like that, because it could potentially hurt someone and most likely kill them if there's an entire panel falling a couple miles in the air. Yeah, that is very dangerous. But apparently the panel was missing 4 bolts. I don't know how you mess that up that bad, to miss 4 bolts in a panel. That's very important. And it's reflected in their stock price. Boeing has done terrible recently. Let me pull up their year-to-date information. So Boeing's currently trading at 208. It's down 0.3% today. But just year to date, it's already down almost 20%. So it's just been getting clobbered recently. And let's see what I was at the beginning of the year. So it was at 250, and now it's all the way down to 208. So they've just been getting clobbered because they had one bad news after another of this kind of stuff. And they got sued because it was traumatizing for the people within the plane to have that panel ripped off mid-flight. There's people that were suing. There's kids crying, trauma. So which would be scary because the amount of pressure and like the wind speed going through that entry point of the panel, it would be terrifying because everyone in the plane could feel it. And it would be hard not to freak out a little bit when that happens mid-flight. You don't know if you're going to die. It obviously wasn't that serious. It was just the panel. But when you hear that noise and you see just a gap in the plane, yeah, that would be pretty terrifying. All right, Toyota. While the entire EV market is just going into dog, the Toyota seems to be thriving. They are up 53% over the last year in comparison to Tesla being down over the last year. And huge companies like Ford and GM and companies like that haven't been doing nearly as well as Toyota. And reason being is that Toyota has mastered the hybrid, where they have the mix of the gas-powered vehicles and also electrical vehicles. And they have that perfect combo, that mix, that is giving people the cars that they really want right now. Because all electrical has been doing terrible, especially with the news of China coming out with the cheaper electrical vehicles. If Tesla and other EV companies want to compete pretty soon down the road, they're going to have to cut their costs. They're going to have to be able to produce vehicles that are far cheaper. Next story is with 23andMe. Unfortunately, over the last year, it's down 77%. They just got clobbered on their earnings report as well. It's down over the estimate was missed by over 300% negative. So it was not a good earnings report for 23andMe. They're down to, I think it was around 50 cents a share, and it just has been getting clobbered. Apparently, people don't really care about family history these days, which is kind of sad. And I'm a personal fan of family history. I like going back and just researching my relatives, where I came from. And it's cool to see that my genetic makeup as well through companies like 23andMe. But yeah, it seems to be growing less popular, and their earnings and revenue are dropping dramatically as well. This is one of my favorite news reports of the day is Mexico. So in regards to the imports from these countries, Mexico, for the first time in 2 decades, exports more into the United States than China. That's crazy news. Because for the last 20 years, it's always been China. But Mexico, for the first time in 2 decades, exports more into the United States. I am personally a big fan of that, because by doing that, we are supporting our neighbors here in North America more than just the super dominant China over in Asia, right? And that is just big news for Mexico as well, for their economy, and for us to basically be partnered up with our neighbors here. I think we should help them out a little more, and that's good to see that Mexico's exporting more. And it appears that we have a little beef with China as well. We don't want to support them too much, especially because we're 2 world powers, and it's nice to be able to help just companies, to help countries that aren't as dominant as China. Jobless claims falls 7,000. So the jobless claims is an important number because it really indicates the strength of the economy. Because the more people we have in the workforce that are out there working, making money, the better and stronger the economy is. There's more money that's liquid, that's flowing through the economy, and it's just better overall. There's more consumer spending, the market goes up. So it's overall great for the economy. So it's good to see that number finally drop 7,000 jobs. We saw that in January. We increased like the amount of jobs that increase was actually quite dramatic. I don't remember the exact number, but it definitely went up, and the estimate was far lower than when it came in. All right, so that might be it for today. Just a quick episode with some quick highlights, and I think the last company that I will highlight is, let's see here, it's MDB. I talked about a little bit ago, and MDB is MongoDB. And it's like a package software company. It engages in the development of and provision of general purpose database platforms. And so they also do, like, what's it called? They do consulting and training and stuff like that. But it has been on the rise. So it's up another $27 today, up 5.79%. And earlier this year, it was at 350-ish. And now it's all the way up to 500. So year to date, they've seen a 23.44 increase in the price, and over the last year 119%. So I've also seen from institutions and specific platforms that MDB is a very solid growth stock right now. And so I wouldn't be surprised if it continued to grow, MDB. And Microsoft is up to 420, and they're up 1.3%. It dropped slightly once the earnings report came out, but it's quickly recovered. It dropped down at 397, and now it's up to 419.66. And their dividend's coming up. They have a dividend paying on February 14th, and they're paying out 0.75. And the last company of the day that I will talk about is Pepsi. So Pepsi just came out with their earnings reports, and I'm not too impressed. The stock dropped. It's down 2.6% today, and it was at 174, and it dropped all the way down to 167 for a second there. And what I personally don't really like is that they increased their dividend payout once again. They upped it by 7%. It's a company that is not growing. It's not growing very much. Over the last year, it's down 3%. Year to date, down 0.08%. Last 6 months, down 8%. So it's just not a very solid growth stock, and to be paying out more dividends just to please the investors, I'm personally not a fan of, especially in these non-growth companies. You have companies too that are like AT&T that are deceivingly good. It looks like they're solid stocks because they have solid dividend payouts. It's around like 4% for AT&T, but what's the point when the stock is dropping 5-6% a year? So don't get caught in value traps of companies that pay solid dividends, but their growth is just not reflecting that, because it's better to make 1% dividend in a company that's building off appreciation than a company that pays 10% in dividends but it's dropping 12% a year. You're not making money. So just make sure you don't get caught in these value traps, and you'll be good. So just make sure to do your research to see how the company's been performing, how they're going to do in the future before you invest in a company that only pays dividends. All right. So that is it for today. Before I close, just the quick disclaimer: this podcast is for informational purposes only and does not constitute financial, investment, or legal advice. And actually, right before this too, please reach out to me on marketpulse.io. Feel free to reach out and ask any questions and ask about any stock, any ticker that you want a deep research report on, and just feel free to reach out. I respond pretty quickly, and it's marketpulse.io, and it doesn't have any posts, but you'll see the podcast logo on the account. So, all right, back to the disclaimer. The content provided is based on the host's personal opinions and experiences. Listeners are advised to conduct their own research and seek the advice of qualified professionals before making any investment decisions. The host and guests do not guarantee the accuracy or completeness of the information shared, and they are not responsible for any actions taken based on the content of this podcast. Investing involves risk. It's all risky. And past performance is not indicative of future results. The host and guests are not responsible for any losses or damages that may occur as a result of investments made after listening to this podcast. Once again, guys, thank you. Much love, and I appreciate you listening to this podcast. And have a great weekend. Enjoy the Super Bowl. Go Niners. Sorry if you're rooting for Mahomes and Taylor Swift, but hey, go Niners. I'll catch you guys next week on Monday.